Welcome to Madam and all my friends. Today our group will present chapter 22, which is Capital Acquisition and Repayment Cycle. My name is Nur Ala Suraya binti Roslizam.
My name is Siti Sarah Zahira binti Safri.
My name is Nur Syairah binti Sahlan.
My name is Nurul Hidayah binti Abdul Wahid.
My name is Nur Zahira binti Syaiful Bari.
And my name is Nurul Shazwani binti Samsul Ari.
Today, I will explain about the characteristic of capital requisition and repayment cycle and also the accounts in the cycle. Basically, this chapter concerns about the acquisition of capital resource through interest-bearing debt and honest equity and the repayment of the capital. There are 4 characteristics of the capital acquisition and repayment cycle that influence the audit of these accounts. The first one is relatively few transactions affect the account balances, but each transaction is often highly material. Audit schedules for most accounts in the cycle include in the beginning balance of every account and transactions that occurred during the year and the ending balance. The second one is the exclusion of misstatement of a single transaction can be material. The auditor's primary emphasis in auditing these accounts is often on the completeness and accuracy balance-related audit objectives. The third one, a legal relationship exists between the client and an entity and the holder of the stock, bond, or similar ownership document. The auditor must determine whether the client has met the requirement of debt or equity agreement. In the audit of transaction and amount of the cycle, the auditor must ensure the significant legal requirement affecting financial statement have been met and adequately present and disclosed in a transaction. And the last one is the direct relationship exists between the interest and dividends account and debt and equity. In audit of interest-bearing debt, auditor should simultaneously verify the related interest expense and interest payable. This is also true for honest equity dividends declared and also dividend payable. Therefore, the accounts in the company's capital acquisition and repayment cycle depend on the type of business the company operates and how its operations are financed. The unique characteristic of the capital acquisition and repayment cycle affect how auditors verify the account in the cycle. For the learning objective 1, we are required to identify the accounts and the unique characteristic of the capital acquisition and repayment cycle. These are the cycle that often includes in this account. For example, notes payable, contracts payable, mortgages payable, bonds payable, interest expense, accrued interest, appropriation of retained earnings, treasury stock, dividends declared, cash in the bank, capital stock, which is common or preferred, paid in capital in excess of par, donated capital, retained earning, dividend payable, proprietorship for capital account and partnership for capital account. Next, I will pass to the next presenter.
Okay, my part is methodology for designing tests of balance for notes payable. So in this notes payable test of balance, auditor must consider to do a check on business risk, tolerable misstatement, inherent risk and control risk, the result of test of control, the result of substantive test of transaction, and the result of analytical procedure. So for tolerable misstatement, auditor often sets a low level of tolerable misstatement because it is possible to audit the account balance and transaction in account payable. For inherent risk, also the auditors set a low inherent risk because the correct account value is usually easy to determine. So auditor mostly concerned on the completeness objective for notes payable account balances and completeness objective for notes payable disclosure, such as collateral and covenant restriction. So what is notes payable? Notes payable, as shown in the slides, is a legal obligation or commitment. It could be secured and unsecured. It It issue between 1 month or 1 year, but longer term do exist, and it is issued for different purposes, such as buying a house or buying an asset. Next, principal and interest as shown in the photo. It should be made according to the agreement. So I'll pass to the next presenter.
Okay, so I will continue with the objective of the notes payable. So the objective of the notes payable are to determine whether the internal controls are adequate, which is the internal control over the notes payable are adequate, which that contains the four important internal control. Next, the transaction are properly authorized and recorded, which is the transaction of for principal and interest involving the notes payable. Sorry. The transaction are principal and interesting involving notes payable are properly authorized and recorded in accordance with the 6 transaction related audit objective. And the third one is the related liabilities and expenses are properly stated, which is the liability for notes payable, and the related interest expense and accrued liability are properly stated as defined by 7 of the 8 balance related audit objective. Next, so there are 4 important internal controls, which is the first one is proper authorization for the issue of new notes. Second, adequate controls over the repayment of principal and interest. Third, proper document and record. And the lastly is periodic independent verification. Next. Okay, this is the explanation more about the internal controls. So the first one is proper authorization for the issue of new notes, which is the responsibility for the issuance of new notes should be vested in the board of director or high-level management personnel. Generally, two signature of properly authorized official are required for all loan agreement, which usually stipulate amount of loan, interest rate, repayment terms, and the asset pledge. When notes are renewed, then they need to be subject the same authorization procedure goes for the issuance of the new notes. This means when they renew the notes, they need to follow by authorization procedure seems like for the issuance of the new notes. The second one is adequate controls over the repayment of principal and interest. The periodic payments of interest and principal should be subject to the controls in the acquisition and payment cycle. At the same time the notes was issued, the accounting department should have received a copy of notes, much like received the vendor's invoice and receiving report. The account payable department should automatically issue checks and electronic fund transfer for the notes when they become due. Again, in the same manner in which it prepares payment for the acquisition of goods and services, a copy of note provides the supporting document payment. So the third one is the proper document and record. This includes subsidiary records and control over blank and paid notes by an authorized person. The paid note should be cancelled and retained under the custody of an authorized official. And then lastly is periodic independent verification. The detailed note record should be reconciled with the general ledger and compared with the note holders record by an employee who is not responsible to maintaining the detail of the record. At the same time, an independent person should recompute the interest expenses on note to test the accuracy of the record keeping. Next. Okay, this is an example for the transaction note payable and the related interest account. As you can see here, the account related interest account. For example, when the customer buys the goods or product, the payment of principal will record at the cash in bank and credit. Next. So test of control and substitute test of transaction. Test of notes payable transaction involve the issue of notes and the repayment of principal and interest. These audit tests are part of a test of control and substitute test of transaction for the cash receipt and cash disbursement. Additional test of control and substitute test of transaction are often by test of detailed balance because of the materiality of the individual transaction. Test of control for the notes payable and related interest should emphasize testing the four internal control that we just discussed just now. And in addition, auditor should verify the accurate recording of receipt from notes proceed and payment of principal and interest. Next, I will pass to the next presenter.
Okay, so we will move forward to analytical procedure for notes payable. So there are three analytical procedure that we can see and we can get from the textbook. So the first one is analytical procedure on recalculate approximate interest expense on the basis of average interest rate and overall monthly notes payable. The possible misstatement of this is interest expense and accrued interest or omission of a note payable. Second one is compare individual notes outstanding with those of the prior year. Possible misstatement, omission or misstatement of a note payable. And the last one is compare total balance in notes payable, interest expense and accrued interest with prior year balance. The possible misstatement of this, misstatement of interest expense and accrued interest or notes payable. Next. Okay, so there are two major balance related audit objective in notes payable. So there are two most important balance which are completeness and also accuracy. For example, completeness is existing notes payable are included, and the second one for accuracy, notes payable in the schedule are accurately recorded. These objectives are very vital because misstatement can be material if even one note is omitted or incorrect. Next. However, there are several, which is 5 other balance related that we can find, or other balance related audit objective in notes payable that we can find in this chapter, which is detail tie-in, classification, cut-off, obligation, and also existence. So for the detail tie-in, the example given is note payable in the notes payable schedule is agree with the client notes payable register or master file. The total is correctly added and agrees with the general ledger. For classification, the notes payable in the schedule is properly classified. For cut-off, notes payable are included in the proper period. For obligation, the company has an obligation to pay the notes payable. And the last one for existence, notes payable in the schedule exists. Next. So this picture stated the types of audit test for capital acquisition and repayment cycle. For next. So there are 7 included footed and cross-footed. The first one, type of audit test that we can carry out is trace to prior year audit schedule. And then number 2, obtain and review copy of not included in permanent file. The third one, examine, cancel or and check. And the fourth one, agree to confirmation received from bank. Number 5, trace to general ledger. Number 6, recomputed expense and accrued interest with no difference noted. And the last one is footed and cross-footed. Next. So in addition to balance related objective, there are 4 presentation and disclosure related to this objective. Very important for notes payable because accounting standard require the footnote adequately describe the term of notes payable outstanding and the asset pledged as collateral for the loans. I will pass to the next presenter.
Okay, next, I will continue the type of audit test for notes payable. So, from the beginning balance 10,000, from the previous slide, we made the payment of 10,000 that I already highlight, which is yellow color, and the balance is 0 at the end of period that I highlight for the green color. So, how do we know that we made the payment notice? So, look at the item number 3, which is examine cancel note and or a check. So the auditor examine the check that was paid and did not and say everything is good. The balance should be 0, and the notice for item number 4, which is agree to confirmation received from the bank, which we'll talk about the confirmation when we cover the cash that this loan has been paid. So the interest rate is 9.5%. This person agree the confirmation from the bank. Next, at the beginning accrued interest was 200. We expend 712 and we paid for total 915. So those two together, and at the end of the year accrual for this loan, which is that I circle color black, is not because the loan is no longer with us. Therefore, we should not accrue any interest. So this is how you read the other loan, second loan. When we start, there was no loan, then we add 10,000 that I highlight color purple for item number 2, which is obtain and review copy of not included in the permanent file. So the ending balance is 10,000. The interest rate 10%, and how much we spend 250 and accrue at the end of the year we bill 250. Next. So this is the balance related or the objective. Not payable in the not payable shall do agree with the client notes payable register in the master file. This is the detail tie-in. So the amount 20,000 at the balance end of period is will be traced the total to the general ledger. So commonly these are often 100% basic because the small population size. Next. Okay. Identify the primary concern in the audit of owner equity. Next. Okay. So the first thing we want to differentiate is the important difference in the audit of owner equity between the publicly held corporation and a closely held or private corporation. Okay, what is the difference? Most private company or small company, they have a few shareholder, less shareholder, and only occasional stockholder equity transaction. So there's not a lot of transaction in the equity section, especially in the common stock publicly. Publicly trade company are a little bit different. They are more complex, and we need to verify capital and common stock, and we need to verify additional paid in the capital asset of PAR, and also we need to verify retained earning and related dividend. Next. So this is a typical account that we will use in this cycle. Basically, the first thing the company will do the issues with the debit cash, and credit the common stock, and also credit paid in capital or common stock. Then the company may pay dividend, so there will be debit dividend in retained earning and credit dividend payable. Then where they pay the dividend, they debit dividend payable and credit the cash. Next. So this is the internal control. First is proper authorization of transaction. It means that when they happen, they are material, therefore they are approved by BOD, which is Board of Directors. So especially common stock may be loan can be approved by top management, but issuance of common stock is by the BOD because you are changing the ownership of the company. So anything that deal with the issuance of stock, repurchase of capital stock, and declaration of the dividends, the auditor easy to audit this account because just to review the minutes of BOD to see what they decide to do another. Second, internal control is a proper recording, keeping, and segregation of duty. So internal control for a company must ensure that the actual of the stock are announced in the corporate record. It means that we want to make sure that we should have a capital stock certificate record. We will record the issuance and review of capital stock, the life of corporation. It will have certificate number for each certificate, the number of shares issued, the name of the person to whom it was issued, and the issue date. Basically, we have a record that shows who owned the stock, their name, their address, and their social security. When did they buy a stock, the date of purchase will be sold. When shares are purchased, the capital stock certificate book should include the cancel certificate and the date of cancellation. So basically, the company buy back the stock, they will remove it from this record because they want to make sure that actual owner are on the books. So we want to make sure that the correct amount of dividend is paid to be a shareholder owner the stock of the dividend record date. So record date. When it comes to the stock, we need to be aware of three days, which is date of declaration, date of record, and date of payment. So how do we make sure that the date our owners are on the date of record? Is through the shareholder capital stock master file. It means that we need to keep track of this because the record of the outstanding share at any given time. Last internal control is independent registrar and stock transfer agent. So any company with stock listed on a security exchange, which means publicly traded versus private, is required to control and the improper issue of stock.
Okay, Assalamualaikum warahmatullahi wabarakatuh. I'm Shazwani and I'm presenting the learning objective 4. So for this part, I would like to present about the design and perform TOC, test of control, STOT, substantive test of transaction, and test of details of balances for capital stock and return earning. Next. So for audit of capital and paid-in capital, auditors have 4 concerns in auditing capital stock and paid-in capital in excess of par. So the first one is completeness. For completeness, the existing capital stock transaction are recorded, which is the auditor confirm with the agent whether any capital stock and transaction are occurred. And the second one is occurrence and accuracy. So the recorded capital stock transaction occurred and are accurately recorded, which is we examining the minutes of the board of directors meeting for proper authorization, and we verify the accurate recording of capital stock transaction for cash by confirming the amount. So the third one is accuracy. The accuracy is we as an auditor verify the ending balance in the capital stock account by first determining the number of shares outstanding at the balance sheet date. And the last one is presentation and disclosure. So for presentation and disclosure, we determining whether all the 4 presentation and disclosure are satisfied by the corporate are satisfied by the corporate charter and others, which is the director, our stakeholder, and so on. Next. For audit dividends, there are 6. Okay, the first one is occurrence. So for occurrence, recorded dividend occurred and we examining the minute of board of director meetings. And completeness is for existing dividend are recorded, and we as an auditor determining whether restriction exists on the payment of dividend or not. And the third one is accuracy. Dividends are accurately recorded, recalculating the amount on the basis of the dividend per share times the number of shares outstanding. So how we want to recalculate the dividend? So we recalculate by the basis of the dividend per share times with the number of share outstanding. Next. Next one is occurrence. Okay, so for this, dividend are paid to stockholders that exist. And the completeness is dividend payable are recorded. So it should be done in conjunction with declared dividend, and unpaid dividend should be included as a liability. Last one is accuracy. So for accuracy, dividend payable are accurately recorded. The next one. Okay, for audit of return earning, there are two, which is earning net earning for the year, dividend declared. So that one is for transaction involving retained earning. And they also may be correction to prior period earning, prior period adjustment, and appropriation of retained earning. So that's all from us. Thank you for listening and Assalamualaikum.